Hello everybody, welcome back to Financial Trading Basics Part 23, Liquidity. Just continuing on our conversations with the ideas, consolidation, market mechanics, and mainly trading, or at least general ideas to approach specific trades, but just different ideas that I think encompass liquidity. So from our old definitions like liquidity, currency, volatility, identifying momentum trade, we discussing how to dissect sentiment a little more. Previously I just had a general chart that I just pulled off the internet, but for all intended purposes, or all intensive purposes, I don't know what the right phrase is, but that it's correct. So we'll be talking about dissecting sentiment. We'll be talking a little bit more about mixed trading theses, just how to approach. Like the example that I have is lumber liquidators versus like the price of lumber versus like STHL. I think that's the acronym, but like chainsaws. What would be the best way? What would show the strongest correlations for approaching a trade? Spoiler alert, always direct access, but just I'll be reading a lot of the stuff I had a lot of notes taken down. I'll be reading off of here, it's not all on the board. But I have liquidity can cause volatility and momentum can cause volatility. Specifically, if something doesn't have, has restricted access or only very few people can trade it, a price increase could spike very, very genuinely just because of illiquidity. But we will be talking about identifying momentum trades because of liquidity. And I don't think, as current state of economy right now, I don't think we'll ever go to there's no possibility to return to an illiquid market in any way. But returning to our definition, we said liquidity in a previous episode was defined as high trading activity. We're going to extend that definition just to say access to currency. And in the consolidation episode, we just had these percentages as a way to talk about how consolidated are different aspects or components of the economy. So how consolidated is liquidity? I think it's about 65% currently. I think we live in a pretty liquid marketplace. People have access to brokerages, people have cell phones. Even in underdeveloped places of the world, you'll typically have access to a cell phone before you'll have even really any developed super economy parts, and that's still proportional to population, and population will still increase, and if there's more people, obviously using currency, there will be more access to currency. So that's all I had for just the economics, and I think dissecting sentiment's kind of just more like trading, but I have up here investor tolerance versus market mechanics is low, about 15%. I think they'll go up to 80%, simply meaning that people see red in their account, or depreciation day, they start calling their broker more, and they start calling or contacting their brokerages more. But again, now we'll be talking about, this is general for the stock market, right? The stock market's a very mature place. I have 95% of people have 0% concern with stock investing, period. Or you might go lose money on Apple, or might make money on Clover, or you might go make money on GameStop. But like the concept of, is investing bad, good, not even a question, integrated into the society for like 95% of people. You might find 5% of people that say investing is bad, but morally no. But my point is regardless of that amount of maturation, I still think market mechanics develop trade opportunities. So for like I said, 95% was the terms of maturation or consolidation of sentiment for, is stock trading good, or good mechanism to have. So obviously that's not going to go up much more, and then neither will the consolidation for market mechanics developing the trade opportunities. Meaning, even if we identify a momentum trade, a GameStop that's going to go up from, and just general percentage, what do I think a momentum trade is? Bitcoin raising 300% in the context of stable. And again, I want to reiterate, my trading thesis is Bitcoin is stabilizing currency as a reserve because of the limited supply and because of the current adoption state. Regardless of price action, I'll give you updates on Bitcoin. I'm still very bullish, obviously. And I'll give you some trading updates. What was I saying? So, like the consolidation of Bitcoin or just cryptocurrency, I saw 13% of current money managers recommending Bitcoin or crypto at all, just on CNBC recently. So, right, the part of the thesis that I would emphasize is solving the currency problem is not debatable in the breadth of economy, the breadth of the population. And again, we talked about the main trading thesis for Bitcoin in the previous episodes. I'll just give you the price predictions. But again, I see it again as the US dollar as the global reserve currency, but even fiat dollar versus government central bank issued stablecoin, a globally adopted, because the Federal Reserve has the infinite ability to print money, or that country over there has this corruption, or that country over there has this economic inefficiency, or Brexit, or stuff like that, the consolidation time frame of Bitcoin is tremendously less than currency. Like the 13% of money managers recommending Bitcoin versus, like I said, on the currency, how will that consolidate? I think we're at the tail end. Like I said, I don't think history really doesn't fucking matter until for the current consolidation of just currency in general. But because of nation states, a nation state stable coin is not possible to be the reserve. And Bitcoin is clearly the earliest adopted or most adopted crypto as is for the organically adopted ones. And then I just said for the sentiment of momentum trades is fun. Alright, a lot of people will say, why is it going up? Why is it like, I just see it like, I genuinely see it as like people at a rock concert or at a party where everyone's just having a good time. People, they're willing to throw $15 on whatever the gambling table is or whatever. And so in our current trading environment, I really think that's just people just have fun doing it. And so that's why I think the economic driving factor from momentum trades is fun. Let me make sure I'm still rolling. So I've covered most of what I've wanted to cover for the mixed trading theses, because again, so I sold Carnival Cruise. Again, sold Carnival Cruise for probably about 12%, made like $3,000 on like 21 grand. Just for technical reasons, would re-enter or evaluate a new trade. So again, I still don't, I haven't watched the price of corn or the price of lumber enough to know what's a good cycle or what's, maturation of those markets. And again, that for me, that just comes from research, observation. Just go look at the shit and say what's kind of an appropriate trade, and then look at the current, what's going on. How about the maturation of the commodity market resources versus currency? All right, we just talked about the Bitcoin and stuff. Well, I guess we haven't. A note on the Bitcoin, just different stuff I pulled off TV. I see all of the regulations as good, like the efficiency, the ransomware recovery. Again, that shows again just the ability to address the problems that people have seen as hurdles before. Right, regulation as a negative. This is regulation as a good thing. And Gensler, every financial potential regulator, former regulator, very good sentiment from all of those. So I think I see that as very, very bullish. Regulation is reactionary. I just have regulation is reactionary in general, just grassroots driven for literally any policy, and the other ones we talk in the legal series. And positive for investor security, right? That's how you get, right? I would say, frankly, investors don't like the depreciation more than they care about the regulation. But that's very good for the 15% we said for just seeing depreciation maturing to about the 80% or the 13% of money managers just recommending Bitcoin or cryptocurrency in general. Then I also saw as an economic result, momentum is proportional to demand, right? We said that we won't live in an illiquid market, so all momentum trades will be proportional to demand. Said sold the Carnival Cruise, would evaluate a new trade, would really like to do some sort of like actual currency spot pair against like a future of a commodity, but again, just don't have real trading perspectives. So about overall, earlier in the year said I was hoping to have good cash flow, obviously still not, but plus 40% on the year. Started off the year really well, was at about 100%, minus 7,000 on my current Riot. Will trade on the pop, meaning I expect, and will hold Bitcoin till the end of the year, meaning I expect Bitcoin to catch momentum, Riot to appreciate substantially. I'll trade the Riot on any pop. I will hold the Bitcoin, not try to trade the pops on those at all. For Bitcoin specifically, keeping up with the crypto craze, I expect another serious decline in all crypto prices similar to last cycle because solution is several cycles away, not because adoption or sentiment. And again, this is at the end of the year. So the thing that I want to be just been my own prediction, additionally, current adoption levels don't create an actual momentum trade, meaning that 13% against where is Bitcoin at in the consolidation as the reserve for the anchor point for the crypto market, I don't think is close. Like I said, I think the price will still cycle 4 or 5 times, 25-ish years, but I'm betting on a $400,000 peak again around the end, like the beginning of January, December, because when we see a momentum trade in the stock market, or you see GameStop going, I mean, in a mature financial liquid market, we're seeing GameStop go, I don't even know what it was at the beginning, but I feel like $5, $7 to set like hundreds of dollars. So you were talking like 100 to 150x multiples, and so compare that to Bitcoin's 600% increase to 50% decline. I don't even see that. That to me is not even comparable as like a momentum. There's definitely momentum on GameStop. There's no momentum there. I just have it on here. There has not been momentum in the price action of Bitcoin at the current trading price action. Haven't followed another. You said I will enter Ethereum again. That'll probably be 20. I think I said 18 months, but probably 24 months, 2.5 years, probably whatever that is. But I think just making predictions. I think the bottom is in on Bitcoin. I think it would be a great entry point right now today. If I had no position in Bitcoin and I was wanting to invest, what I would do is I would take 50 to 75% of whatever capital I'd be willing to risk by today, and then have it on the reserve, the cash available should we dump to the 25 or 28 level. But I would even put that as a limit buy right now, because again, the volatility of Bitcoin, like I said, I don't think volatility is very appropriate yet. Like I said, volatility is proportional to momentum. I don't think momentum has not entered the Bitcoin price action yet. So I would have that as a limit buy immediately. But haven't followed another crypto close enough. Like Ethereum, I want to enter, but I don't know the cycling. And I really think they'll all be very similar, but I just don't know the price points. But I don't think it's that similar to 2017, right? I entered the Riot because Bitcoin had a good May in 2017 cycle. Obviously not the case this time, and I wasn't around for the 2013 one. But regardless of any price action, Bitcoin has not seen momentum. Said that like 3 times. And future Bitcoin cycles will peak harder because of adoption. Once that 13% goes to 50% or to 80%, right? I have the stock market at 95%. So the Bitcoin peaks will be a lot harder. That's why I will sell out most of mine. I do expect a big decline. Again, not now, not immediately. I think the bottom is in for the next 6 months, but I don't think it will have. I don't think, again, for currency, I don't think currency versus stock market. I don't think the currency development has a lot more to go. So I don't see an ETF gets approved. Great. I still don't see a sentiment or the currency maturation enough to not see a big decline next time. So I would definitely say, I would recommend a buy now, just the way I said, and then I would recommend selling 6 to 7 months, and I'll give you another update once the momentum really kicks in. So that's what I wanted to say for liquidity and for the crypto craze comments that I have written down. Thanks for watching Financial Trading Basics Part 23.